very much. Good morning, everyone. This is a great opportunity for all of you guys out here to ask questions of this fantastic panel that we've got. Sessions like this live or die by the questions that come from the audience. So if you want to watch 6 people on stage dying, then don't say a single thing. And my threat to you all, as I'm British, is that if there are no questions, we're going to start talking about cricket. So, and I'm going to be asking you questions. So, so please have some questions to ask. I think the best thing to do is a little bit about me, very little bit about me, who I am, and then I'm going to get the panel to introduce themselves, and then we can start. So very, very briefly, my name is Ben Rooney, as you heard. I am the technology editor for the Wall Street Journal Europe. And we at the Wall Street Journal take a very, we take the Eurovision Song Contest view of Europe, which means Europe extends, well, pretty well as far as I want it to extend. And that certainly includes Israel. Someone did point out to me the danger with taking the Eurovision Song Contest view is that also includes, that means they could end up sending me to Azerbaijan or heaven knows elsewhere else. So, but it's been a fantastic time. I was here in September and I did this big tour of 10 European cities, of which the first one I went to quite deliberately was Tel Aviv, and then the second city that I wanted to visit was Istanbul. And I was here, and Burak very kindly hosted the visit. And the reason I came to Istanbul second was because there is, essentially if you're a European country, you look in Europe to see the only country in the entire of Europe that's actually growing. So you had to come to Turkey to find out what the hell are you all doing down here. So that's enough about me. I think the panel, if you introduce yourselves, Charles, we'll start with you. A little bit about who you are and why you're here in Turkey, and then work our way around.
Yeah, good morning. Charles Irving. I founded a company called Pond Ventures. Pond is a venture capital company, operates out of Silicon Valley in London. We've been operating for 15 years now, and we already have started investing in Turkey. With a company called Mechanist, which is doing very well. We're very happy with Turkey, we're very excited with Turkey, and we're looking to do more investments in Turkey and also creating a new fund for Turkey. So we're Turkey positive.
Hi, so I'm Pamir. I'm a venture partner with a fund called Hummingbird Ventures. We've been around for 12 years. We're seed and early stage funds, which came out of the Benelux, out of Antwerp. And over the last 3 years, we started looking at Turkey. And we made a few investments in the Turkish market, including çiçeksepeti.com, including a company called Peak Games and Digitouch. And in each of these companies, we were the first investor. And we're also investing in the Middle East. So we've invested in a company called Marca VIP, which is now the largest e-commerce company in the Middle East. It grew extremely fast in the last 12 months. We're very excited about the Middle East as well. So, you know, I personally spend my time between Amman and Jordan, Dubai, Istanbul, but I'm based in London. And so while we're in Turkey, we remain extremely excited about Turkey. We actually, the microphone just.
No, you're on.
Yeah, we were just joined by Firat İleri, who's there. Firat, hello, you can raise your hand. So Firat just joined us. He's, you know, his only weakness is that he's from Cyprus. Just joking. Actually, that's probably not even a good joke. But no, look, Firat's a really bright guy who was at MIT, studied computer science, went to do kind of rocket science math at JP Morgan in London, and joined us a few months ago to focus on the Turkish market. And so we're very bullish on the Turkish market as well. We love what we're seeing. At a personal level, I started looking at the Turkish market about 3 years ago. And one of my observations is that it's really been maturing a lot in 3 years. You know, the ecosystem has matured a lot. Anyway, I'll shut up now and let my fellow co-panelists introduce themselves.
Okay. My name is József Kövér. I'm a partner with 3TS Capital Partners. 3TS is a VC firm. We have been around since the late 90s, covering geographically Central Eastern Europe in a wide sense, so basically Baltics to Balkans, as we say. And that certainly includes very much Turkey. We started to cover, I was given the task to cover Turkey back in 2008, and we spent the first couple of years just exploring the market, building the network, both on the advisor level and hooking up with startups and talking to companies and so on. And we ultimately ended up closing our first deal last year in an online matchmaking or serious dating business called Egypt. We are very happy with it. What we do is we look for internet consumer plays, but also we do look for technology companies which have global ambitions with some funky, interesting technology. We have obviously, we see more of the internet plays and less of these interesting technology plays, but that is coming as well. Again, experience has been good so far. We are bullish. We want to do more.
Hi, Ali Karabey from 212. I'm a managing director there. We founded it 2 months ago. We've made 3 investments so far in Turkey. They are Ballerin.com, Butsigo.com, and the social media house Arcade Monk. We will make 3 more investments, if all goes well, by the end of March. So we will have 6 investments in the first quarter of 2012. We invest in ICT companies, startups, post-beta, ideally with some revenue already. We are very bullish in Turkey. That's why we are here.
Does that work? Yes. Good morning. Hans-Jürgen Schmitz from Mangrove Capital Partners. I guess I'm the only one on this panel who has not invested in Turkey yet, save for Ben.
Yes.
So this is exactly why I'm here. I want to explore the country, talk to the people, talk to the entrepreneurs and those who have invested, and maybe share with you also some of the experiences that we have had investing not just in Europe for the last 12 years, but in a number of emerging markets, notably Russia, where we've been active since 5 years, and India nowadays. I do correct myself. We had one in and out investment in Turkey, which was Group Foni with Sina Afra. So we have a very limited view right now on Turkey, and I want to walk away from this meeting here and have a much broader horizon on what Turkey is all about.
Excellent. Thank you very much. Actually, Hans-Jürgen, I'm going to start. In that case, I'm going to start with you, because you know, everyone loves Turkey. We've all got, you know, you've all got your money invested in Turkey, so let's talk it up. But you don't currently have an investment. So I'm going to start with you and ask you, what's your impression when you look at the Turkish market as it is today? And we had those 33 pitches yesterday. Mm-hmm. What's the impression that you form, and comparing Turkey with other European nations?
Yeah. I would actually not compare it to other European nations, although you could venture that Russia is Europe to some extent as well.
Yeah,
but I would compare it to Russia in our experiences there 5 years ago. It's pretty much the same impression I get. It's an incredibly, let's say, energetic crowd I find here. The entrepreneurs dreaming up their world, which is partially what we want, which is entrepreneurs that are very ambitious, very naive to some extent as to what they have to expect along the long race or until they hit the wall, as you said yesterday. There's lots of creative ideas, I think, although I was the one who was a bit provocative yesterday by accusing you of presenting, at least at this panel, the impression that there was many things that were copied over from other businesses in other parts of the world, notably the United States. But that was probably a false impression, and I want to correct this also myself by discovering more about Turkey. I think the challenges that Turkey has, if I compare it to what the pattern we've seen, for example, in Russia, and probably in India nowadays as well, is that you do the same thing as Russia did in 5 years, probably in 2 years or 3 years. That is, everything is being compressed, everything is getting done in a rush. Things get overhyped. Valuations, I don't even know where they stand today, but I'm hearing that valuation is just being one criterion or measurement point of where early stage investing stands, could quickly get out of hand. And that is something that is dangerous for the entrepreneurs and their companies. So that is one of the risks I see. What I'd also caution everybody, and we've seen it in Germany, for example, is that initially there was no seed money and no early stage money, or hardly any. Then all of a sudden, the business angels, but the VCs were supposed to fill this gap, and they didn't necessarily because they thought it was too risky. But it's their fault, and essentially we tend to, personally as Mangrove, we always tend to go into the rather riskier part than not. So there was a void, and that void was filled, I'm using the German example, by business angels, which I understand there's also a very active community here. Now what happened though, and I'm not making this a statement relative to Turkey, but I tell you what happened, but my impression was about Germany is that initially there were like, I don't know how many of them, they were just throwing around like in a gunshot approach, small amounts of money over 50, 60, 80 companies in their portfolio. Now, while this was maybe good for you as an entrepreneur to get the much needed initial capital to start, these people essentially couldn't add anything to your business and to the development of your business except occupying anywhere from 10 to 50% in your cap table from day one, essentially. And there were like, and by the time the likes of us came to the table, there were like 10 to 30 investors already in this company, and it was a mess. And raising funds on the basis of this is hard, because even if everything else was green on our checklist, the investor structure is often a red flag. Now, the business angel environment, the business angel community in Germany, I'm using again the example, has matured significantly. They've pretty much all came down to realize that this is not the way they can successfully invest their own money. And they have carved it back to maybe 10, maybe 15, maybe 20 investments. They have grouped up in groups, have created sort of funds themselves. So you saw over the last 10 years, a maturing process, which was much needed and also very beneficial for the early stage companies looking for funding, because to be honest, venture capital money in Europe isn't on the rise. So they started actually covering not just the seed, but into the first round investment needs of you as entrepreneurs and your companies. So what I'm suggesting to and I don't know what the business angel community looks like right now in Turkey, but what I'm suggesting to both entrepreneurs and the business angels is to learn from these experiences and be more disciplined, be more cautious maybe about the way you invest, and structure it. Less is more.
Sorry, I want to ask a question of the audience. Some idea of where you all are in terms of your funding. So who here has taken, let's start at the top. Who here has done something that they would consider to be a B round, or a B round of funding? Great, so no one, good. Let's drop down, let's take an A round of funding. Who's had VC money in an A round? Excellent, right, so this is a very rich audience for you guys, plenty of potential. Let's go the other way, let's go right from the bottom. Who here has got money from business angels? Who's attracted money from business angels? Wow, one person. Okay, Who here has...
No.
Yeah,
Where does the money
exactly.
come from?
So, okay, let's try the good classic, the Plan 3F. Who got their money from friends, families, and fools? Who here's got any money? Okay. So you're all desperately looking for money. Okay.
Well, they all have their own money.
Oh, you're all incredibly rich, and you all have your own money. You're all bootstrapped. Okay. Would anyone in the audience just like to say, just anyone who wants to volunteer an opinion, what they consider to be the #1 funding issue for a startup in Turkey? Anyone who wants to volunteer that opinion? Somebody be brave. Otherwise, I'm going to look stupid. Otherwise, I'm going to pick somebody, and there'll be somebody sitting in the front row. Someone volunteer? What do you think is the #1 problem for funding for startups in Turkey? What is your main problem? Okay, no one's volunteered, so I'm going to volunteer this gentleman here. What do you think is the main problem? Just shout, I'll repeat it. Just say it now.
I guess for the investor, it's you don't know where the money is exactly going to go.
You don't know where the money is going to go as an investor.
As an investor, and you want to put the startup in a certain path.
Yeah.
And they may not be ready for that.
You want to put the startup in a certain path, and they may not be ready for that. Ali, you were talking about this, about the difficulty for investors. So really what we're saying is there a problem in Turkey about getting investment money?
I think that there is a problem for that, yes. I do agree and disagree to a certain point. I'm repeating myself from last night, so sorry for that. But if it's the right team, if it's the right idea, I don't see any reason why any company in Turkey shouldn't be funded. I mean, it's great that this many people are looking for funding.
Yeah, exactly.
So it's a good place for us, definitely. I mean, there's one person we invested in already. It is difficult to get funding. There aren't that many places you can go to in Turkey yet to get funding. So I mean, these are difficulties. But I think if it's the right team, the right idea, the right execution, and if you can draw that picture in front of us and show me how you will spend that money, and if it makes sense for me, and if it makes sense for my portfolio, you will get funded.
Charles, you said, did you say you were raising funds at the moment?
Yeah, I mean, we're investing a fund, and we're also looking at doing another fund specifically for Turkey. I think my main message in terms of raising money is raise smart money. I think the point made about angel investing is very, very important. I mean, and just to re-emphasize that point, if you're a startup company, let's say you raise $1 million to begin with, or less, $500,000, and you give away 50% of that company to a group of angel investors, that inevitably, in 1 year's time, 2 years' time, you'll be looking to raise more money. And the problem is that by giving so much of the company away on day one, bearing in mind you as a founder want to be incentivized also in your team, it doesn't leave space for institutional VC money to come in, because we're not interested. We're not interested unless we can at least get 20-30% of an early stage company. So I think it's a very, very important point not to cram the capital table with a lot of, i.e. don't give a lot of the company away on day one to even if it's smart money, but angel money, because a lot of the angels will not be able to follow through when you want to raise the next round of money. So I think that's a very, very important point. I think also now in Turkey is a time for reality. On one hand, it is very exciting. I think everybody enjoys the energy that you can feel in this room. We can feel it in the marketplace. The energy that's there is great. But, you know, the world is a very small place. All of you are reading, and like we are reading about Facebook IPOs, and all of us think we have a Facebook. Well, we don't. The reality is building companies is tough. And building companies takes 3, 4, 5 years to build that valuation. So I think you know, it's great to be enthusiastic, and you should be, and we really appreciate it. Frankly, here is much more exciting than London, I can tell you, in terms of the entrepreneur activity and the energy and the excitement of the market. But be very realistic. Take smart money, not just money, and be very realistic about what the expectations are.
Okay, so we've had you know, we've talked about the things that we like about Turkey. I now want to talk about what do we think some of the problems in doing business are, and some of maybe as people from outside looking into the Turkish market, what the structure of the market looks like. Is it too heavy in certain areas? Pamir, what's your impression of the one thing that struck me yesterday when we were watching those 33 pitches was a huge. They were really in two categories. There were a lot of games, people making games, and there were an awful lot of people in e-commerce. Was that a problem for you? Is that a problem for you?
No, not necessarily. Actually, you know, we're looking at all sectors. I think the only problem we see right now in Turkey is we see a lot of companies which address an opportunity that's too small. So it doesn't get us out of bed. It's not that exciting. And you know, for us to get excited, we need companies where we can see fairly quickly a revenue ramp up. You know, if it's software, $50, $100 million. If it's e-commerce, definitely it has to go north of $100 million quickly in top line revenue. Otherwise, you know, it's not going to be a very exciting exit, and therefore we're not going to realize very exciting returns.
So 100 million, they've got to get there pretty quickly.
Yeah.
Okay. Take notes. Take notes. 100 million. You want to see that in your...
And that's dollars, not tele, by the way. No, I'm serious.
Yeah.
So, look, at the end of the day, it's all about, I think there's this saying that somebody told me the other day that apparently Alan Sugar, you know, he's a famous British businessman, says, which is, you know, revenue is vanity, profit is sanity, and cash is king. And so probably my focus on top line revenue is slightly misplaced. But obviously there are certain ratios on profitability and so on that you expect in e-commerce. I mean, I think we've been also spoiled in Turkey with some great successes, like Marka Foni, like Trendyol, like Gitti Gidiyor, and those are the types of successes that, you know, we also try to strive for as investors. And one of my fears right now, just to address your question, is that I see a lot of great entrepreneurs, great teams, but that to me seem to focus on opportunities that are too small.
Yeah, I think that's a good point. Yes, I want to pick up, because you say you cover from the Baltics to Balkans.
Exactly.
There's a sweep of European history. If we take the Baltics, I mean, you've got the 3 Baltic states there. The one I know best is Estonia.
Yep.
You know, Estonia has a population of 1.3 million people. What's the population of Istanbul? 17. Okay, there you go. Right. So Istanbul could go to war with Estonia and beat the crap out of them. But Estonia has this fantastic dynamic ecosystem, produces more startups per head of population than any country, pretty much any country in the world.
Yeah.
Is Turkey's size, paradoxically, is Turkey actually too big? So it's too inward-looking.
Exactly. That's a very good point, and that is what I feel. That many of the talented entrepreneurs here are excited about the size of their own market. And when they launch startups, they focus on their own market, and they see potentially very good numbers on that market. So the focus is there. And well, I'm happy if I make it big here. That will be really great. Whereas interestingly enough, that's exactly the same problem we see in Poland, which is obviously a smaller country than Turkey, but still the mentality in that sense is almost the same. So very good, talented entrepreneurs focus on their own market rather than think really big, think global. Whereas in countries like Estonia, they have no other choice than think global. So that's why a number of very interesting plays are coming out of some of the Baltic countries. Mostly, of course, not in consumer internet plays, but technology businesses. So my point is here, I didn't have the honor of watching yesterday's presentations, but have been to similar events in Turkey. And what we see is these gaming companies and e-commerce companies and various mostly locally focused. Okay, the gaming's maybe not, but the mostly locally focused plays and less the ambition to go global with some very funky, interesting, for instance, software.
I don't agree yet. I mean, when we're looking at Turkey to invest, we're not looking for a world-breaking technology. I think if one's wasting one's time. If you find it, then you consider to be very, very lucky. I think the Turkish market is big enough to make decent-sized businesses, and that's the reality. 77 million people is a lot of people. You have the dynamics, you have the internet penetration, you have the credit card use, you have the 24, 25, 26 million Facebook users. This is a market where you can make money. So I think one shouldn't kid oneself that you're going to conquer the world. You have to just be realistic, and I think you can make some good businesses. There are some good businesses locally. It's been proven.
And that's also where we come in when you think about it, right? That's our job. When you can't really ask a 23-year-old entrepreneur to think global. I think.
Why not?
I mean, you can ask them, but I'm their partner. That's why I come into the picture, and I tell them I will support you. I will go to the U.S. with you. I will go to Tokyo with you. Let's think global. So I think you're right. They don't think global, but I think it's also
I think
it's also part of our job to show them that we can go global, at least regional.
That's our value added.
Exactly. That's our job almost to show them that it's possible, right?
Right. So that's the job of the you say the job of the VCs is to help them to go from being
one of our must-dos. Yes.
I think it's important for this audience to understand what the VC is thinking and what their parameters are. Number one, our money comes from global institutions who have many, many alternatives of where to put their money. They can buy gold, they can buy real estate, they can go into agriculture, they can go into buyout funds, and frankly, early stage venture capital is the most unpopular asset class in the world. I can raise more money trying to find sunken treasure in the Pacific than I can to invest in startups in Turkey or anywhere else. So one has to appreciate that money for venture capital is extremely difficult to find. Number two, so when we are investing, our responsibility is to the people who have been brave enough to invest money with us. And what does that mean? That means they want a return. They expect big returns because they're taking high risk, putting their money into early stage venture capital. And the problem is, when you're investing in early stage companies, your investment cycle is very long. From a startup to an exit may take 5-7 years. This is a long, long time. Even if you're making 3 times your money over 7 years, that's not a great return. So when we invest, and this is the main point, when we invest, entrepreneurs should understand the first thing we are thinking about is how do we exit this company? How do we make money from this company? When are we going to sell it? How long are we going to? How long is it going to take before we get our money back? What kind of return can we get in 3, 5, 7 years? So everything is determined on those factors. So when you're taking money from a venture capital company, you should really bear that in mind and prepare yourself to really understand what the investment cycle is, and make sure that your ambitions are aligned exactly with your investor.
Let's talk about that. I think you raise a great point, and I want to talk about exits, because you're all venture capitalists. That's what gets you up in the morning. You're not charities. We've seen a couple of quite decent exits here in Turkey. How would you characterize the potential for exits? I mean, for example, what are the public markets like here? Is there an IPO strategy, or is it all going to be exits to trade? Ali, I'm going to have to look at you on that one to start, and then the rest of you jump in.
I think the public markets are not there yet, at least for the sizes that we are looking at. When you're saying public markets, you are talking about market caps at least above 100 million. So it will be tough for our companies, at least in the short term, to seek exits in the public market, even though there is a new, smaller market that was just established, and I think they have 1 or 2 companies in them. And it's very easy, actually, to go public in that market. So I think it's going to be mainly trade sales for the companies that we are investing in. And when you look at, Marcafoni or Gidiyor, they were both trade sale type of exits.
And trade sales to who? I mean, that was eBay and Amazon, so that was, US companies. What about
and then it was Naspers from South Africa.
Yes, that's true.
That was the other one. But what I'm also expecting in the near future is these are obviously foreign players coming to Turkey and taking over decent companies. What I think is I think Turkish conglomerates, Turkish bigwigs will start acquiring some of these companies as well. That's one of my bets.
How acquisitive? Yeah.
I think that's one of the biggest challenges or unknowns for Turkey right now. If you look at the e-commerce, at least, since the majority of the things we saw yesterday, at least, were e-commerce related, and please jump in if you disagree. I think there's a punt here for Turkish e-commerce companies at this stage, and at the same time then for the investors, because in their, as Charles said, in their assumptions from the day one, before they actually wire the money, they have to somehow rationalize who is going to be the potential buyer for how much. And I get to both. Who is? Well, in e-commerce, there's a limited universe of international buyers that do usually invest significant amounts of money through acquisitions in countries like consumer-heavy countries like Turkey, Germany, UK, Russia eventually. And again, I use Russia as a proxy. Unless a country has the potential to create demand that is acquirers from within, you have a problem potentially. Because that means you can only sell to eBay, Amazon, Naspers, Rakuten, and a number of others. Maybe companies we don't even know yet will be acquisitive in emerging markets. We've seen them all getting acquisitive at different rhythms. Naspers being certainly very much emerging markets focused. They have made their bet in Turkey, at least one. I'm not sure they're going to make another one, or whether they build out of the platform they have acquired. I think the latter is more likely than the former. So they're gone. Forget them. Unless you have a very different business model or a very different vertical in e-commerce again, they will probably not be on the top list of acquirers. eBay has done their acquisition. Now, they're typically more acquisitive. I sold Brands for Friends to them, so I know that sometimes they make moves that are not essentially, we sold Skype to them. They're not necessarily moves that you can consider being logical moves in the first place. But nonetheless, you don't complain if you can sell them to them. But they have made their first bet, at least, in Turkey. Rakuten is actually one of those who is acquisitive in emerging markets. I've seen them active in Japan, in Russia now.
Yeah, they're in Ozone, yeah.
Yes. And they've also acquired in Western Europe. So will they lay their eye on Turkey? Maybe. But you as an investor, you better make an assumption and find out to the best you can, whether Turkey is even on their map anytime soon. And soon means like in the next 3 years.
Okay, there's two things. What about Russia? I mean, we've certainly seen Yandex open their first foreign, or their first service outside of Russia was opened here in Turkey. Do we think that's an indicator that, I mean, and you know, one thing that struck me when I came to this hotel was that all of the signs are in Russian. So quite clearly, this is an area that's very attractive. Is Russia a potential? Is there potential there? Javier, I'm going to ask you that one.
I have absolutely no clue.
Oh, excellent, good answer.
I've been to Russia for a wedding only once. No, I do no business in Russia. I really don't know. I think Hans-Jürgen is the guy to ask about Russia because he goes there all the time.
I think, again, coming back to the subject of the exits, even in Russia, where there's money abound and there's big incumbents in almost any category, certainly in commerce and retail, we have not seen any big, say, takeout or takeover of a Russian startup in e-commerce by a Russian buyer. We haven't seen this, and we've been there for 5 years. So I'd be cautious, and I'm not sure the proxy is exactly the right one, but when it comes to Turkey, the question you have to ask yourselves, and I don't know Turkey from that angle, how many and who of those who are today successful companies that are in retail or that are in media will eventually start acquiring to grow?
Yeah, I'm a lot more positive, and you in the audience should be positive. Turkey is one of the emerging countries. So after China, India, Brazil, Russia, the BRICS countries, Turkey is definitely on the radar of most people. The world is desperate for growth. In the US and in Europe and Japan, they are desperate for growth. They have to invest in growing markets. Turkey is definitely on their radar. And the good thing for all of you in the audience is the Turkish language. And what I mean by that, it's the same in China. Foreign investors just can't come here and just create their English websites. Everything has to be made local in the language, in the culture, and the customs, etc., etc. That is your opportunity as entrepreneurs. Right. They will definitely, all of them need good local entrepreneurs and partners to be successful in Turkey, and they want to be successful in Turkey. If a multinational drinks company can spend billions of dollars on a Iraqi company in Turkey, which you know the company I'm talking about, boy, there must be lots of opportunity for what you guys are all doing.
There's someone in the audience from Turkcell, isn't there? From Turkcell? Where is he?
Over there.
Over there. Can we get a microphone? I'm just going to ask you a question about Turkcell's acquisition strategy. So that's really unfair, but I'm going to ask you about it anyway. Can you comment on Turkcell's acquisition strategy? What sort? You're a major player. The largest network operator here in Turkey. Are you looking to acquire?
There are two things that we are trying to do. One of them is invest in growth or even late-stage companies. But this is more like we want to consolidate them. So we want to do M&A activity on them. Mm-hmm. So that they can bring good new sources of money to the company. But as a very important part of the innovation, we are also currently in the process for board approval for corporate VC.
Right.
But this will be more at the early stage. So a good part of this fund will be somehow reserved for early stage investing. But money-wise, of course, a certain part would be also for growth and late stage. But that will be more like consolidating.
And do we know, I'm going to ask you to betray all of Turkcell's secrets now. Do we know when, is there any idea of what that time scale is, when they're going to start? You're saying it's looking for board approval.
Yeah, I don't know how much you know about Turkcell, but Turkcell is going a neutral board phase, let's say. And that phase is, there's a legal limit to that period.
Yeah.
I mean, everything is ready for approval, but we are waiting for the board to finalize, just because this is a very long-term commitment. We want to do it with the final board, not the board.
Okay. So that's potentially interesting. Turkcell doing venture capital. That's very good news for the ecosystem. I'm conscious of the time. I don't want to do one.
I just wanted to add one comment also. I mean, I know around the panel there was quite a lot of focus on exits and thinking about exits when you invest. And I think at Hummingbird, that's certainly what we do. We also think about exits when we invest. But I also would like to talk about something else, which is just passion. Passion for your business, passion for building a great business. Actually, in some way, we don't really, yeah, sure, we do think about exit, but what we really love is to come across entrepreneurs who are engaging into a journey that they're extremely passionate about, where they're just going to build a great business. And in that case, okay, maybe we'll try to think about what the exit might be and so on, but ultimately nobody can really predict what's going to happen in 5 years or in 10 years. But if we feel that there's a journey there, and it's a journey that's going to lead to a fantastic business, and that there's a lot of passion, then that, frankly, is probably enough to get us excited and wanting to be part of that journey. So, while, again, I hear all the arguments, and I think my fellow panelists probably have certainly more experience than I do in the investing game. For us, this passion element, this belief in building a fantastic business is probably ultimately really what gets us out of bed in the morning.
Excellent. Well, that's a great place, because I'm conscious of the time, and I do want to throw the floor open to questions. And as I say, if we don't get any, I'm going to start talking about cricket. But 2 seconds, but you'll be the first. But before we get there, I just want to go round the panel, and I want you to give one piece of advice. Speaking as a venture capitalist, one piece of advice to the startups here that will help them on their journey. What are the things that you would want to see, that would excite you, that would fire you up about their companies? So, Hansi, I'm going to start with you and sweep back this way.
First of all, live your dream. That's to what Pamir also said. We are likewise. I mean, we embark with you on a passion, on a dream that you built for yourselves. But be realistic as to what the roadblocks are on this venture and on this journey, and don't try to over-optimize on your financing strategy.
Okay.
I think they should start talking to us early, even if it's not the right time to invest in them. I like starting to know them early on. I was mentioning yesterday, we've been talking to a company we haven't invested in yet for the last year and a half. And I love seeing a company grow, even if it's not the right stage for us to invest. I like being there, just talking to them once a month, even if it's a phone chat. If I can help with, getting a new client, I'm more than happy to do that. For some reason, they're very hesitant. They think they should reach a certain number. They should hit a certain sales figure before they should knock on our door. Instead, we are very open. We love getting to know new people. And I think they should just knock on our door and introduce themselves and see how we are thinking, and maybe we can start helping from the get-go.
Excellent. So basically, live the dream and talk. Don't be afraid to talk.
Exactly, because I think the problem in Turkey is we are raised in a certain way. We don't really like to approach people because we feel we are bothering them. But obviously, if you're an entrepreneur, you shouldn't feel that way, right? You should go grab what you think you deserve.
Okay,
and
excellent.
So grab us.
There you go. There's your second one. Talk to the VCs because they want to talk to you.
Yeah. 2 things I want to mention. One is of course, believe in yourself, but build a team, build a great team. One-man shows are great, but great teams are much, much better. So build a team of fantastic people around you. That is point 1. Point 2 is sorry for repeating myself, But think big, think global. And if you do so, come to me. Okay?
Excellent pitch.
So my 2 cents is failure is a path to success. So celebrate your failures, fail a lot, but try and recover from your failures quickly so you don't waste too much time. I mean, you know, when I look at my last 12 years, it's mostly failures that I can contemplate, you know, various failures, businesses that I was, you know, founder of that didn't work out, or investments that we made that didn't work out. And that's just a reality. You know, failures is a path to success. I personally get very suspicious when I come across people who just talk about their successes. My advice to you is to be open about and celebrate your failures, talk about them. Have a lot of them, because that's the only way really to learn, I think. And ultimately, as I said, failure is a path to success.
I went to a lecture that Eric Ries.
I love him, by the way.
Yeah, and if you haven't read his book, and I'm not his agent or anything, if you haven't read Eric Ries's book, then I'm sure it's available I'm sure it's been translated into.
But you should also read his spiritual godfather's book, Steve Blank, right? Steve
Blank's book as well.
4 Steps to Epiphany, required reading for everyone.
Well, Eric Ries gave this lovely talk, and I interviewed him, and he said, I've had some fantastic failures in my life. So if you follow me, then you too can have some fantastic failures as well. And I thought, that's the best negative sales pitch I've ever heard.
Well, while we're name dropping here.
Yes, exactly, clunk.
One of my partners was, many years ago, was sitting next to Steve Jobs at a dinner. And he was, in those days, a very young rookie, and he asked Steve Jobs the obvious question. This is when Steve Jobs was successful the first time round. And he asked him the question, you know, what's the success? And Steve Jobs turned around and said, naivety.
Yeah.
And if I knew everything, I would never do anything. So I think that's a very important lesson. I think, just going back to the question, let me tell you the real truth of how we are thinking. I was sitting through a lot of the presentations yesterday. We get lots of business plans, et cetera, coming through the table. We hardly read anything, because what we're interested in is backing exceptional people. It's all about the people, and that's what we're looking for. And I'll give you just a little example. Yesterday, when I was sort of half asleep, having just got off the aeroplane, listening to all these presentations, and the guy, I don't know if he's in the audience, who was selling shoes on the internet, the minute he said, I'm a third generation in the shoe business, I woke up. This guy, whether he knows the business or not, comes, eats, breathes, lives that business. And that's what we're looking for, exceptional people who really understand their business inside out. They breathe, eat, sleep, and dream it, day in, day out, with a burning passion to make it and make it big. That's what we're really looking for. And then we'll look at the business plan, and then we'll talk about the valuations, et cetera. But it's all about people. In our history, we've had a few very big successes, and they have been all about finding really great people. And where we screwed up and lost money, it's because we compromised on the people. Oh, they'll probably be okay, they'll probably learn. They don't. So that's what it all comes down to. It's great people. And when you're out there raising and trying to find sort of investors, you have to be absolutely convinced about your area. You have to know about it inside out better than anyone else in the world, and that's what will make it happen. It's all about making it happen.
Excellent. I have one tiny request. Actually, there's two things I want to do, because I forgot to do it at the start. So I have one tiny request, speaking as a journalist. And that is for, please name your companies something that's easy to spell. Okay? Short names. Gotta love short name companies. If your company name is like 20 characters long, it's so impossible to remember how to spell it. Ozon, there's a great example. Ozon in Russia, you know, 4 letters. I love companies that have 4 letters in their names. So that's my one tiny request. One thing I forgot to do right at the start, and this is going to sound slightly sexist, so I apologize for it. I just want to get some idea, looking around the room, how many women entrepreneurs are in the room. So if the women could just put up your hands, I just want to get some idea of what the breakdown is like. Okay, and just how many women are in the audience, even if you're not an entrepreneur? Okay, all right. Yeah, unfortunately I see that a lot.
It's more here than in Germany, I tell you.
Yeah.
It's better than we would see in London as well.
I was just going to say, it's better than we see. I'm just going to say exactly that. It's a better breakdown in London. And someone I was talking to at breakfast today said that 12% of Turkish CEOs are women, which is considerably higher than it is in the UK.
Can I just make one point?
Yeah, very quickly.
Just one point. We've failed. Success brings success. And we have failed miserably in Europe. And in the US, they've been very successful at this. So don't miss the opportunity. When you get success in Turkey, if an entrepreneur becomes successful, make sure you herald and triumph that success. In the main squares of the big cities, there's lots of war heroes, there's statues of war heroes and everything. There should be statues of successful entrepreneurs in all these cities. Make sure you build on success, because that success brings success, and we have failed miserably in Europe.
Yes, absolutely. Yes, no, could not agree. That's a fantastic point. Really important point. And I'll just have one very quick war story, and then I promise you we'll go to the floor. I was in Estonia, and I had this meeting. In Estonia, there were the 4 engineers who built Skype. Not Nicholas and Janos, who... Nicholas Zenstrom, by the way, if you want the best business model in the world, follow Nicholas Zenstrom, the founder of Skype. He just keeps selling the same company over and over again. So, you know, that's my advice. So there in this room were the 4 guys who actually built Skype, 4 engineers. When they exited to eBay, those 4 guys got a measurable percentage of the gross domestic product of Estonia. Yeah, you could actually measure. That was a measurable amount of Estonia's GDP. And one of those 4 guys was in the room. And he was exactly the same as everybody else. He was in his T-shirt, and there he was. And everyone else in Estonia, everyone in that room, could look at that guy and go, well, he owns a percentage of this entire country, and he's no better than me. And he was in that room. So when all of you in this room are that successful, and you own a percentage of the GDP of Turkey, you want to come back to these meetings, because it's really important, that point, about having role models. It's absolutely essential. Okay, that's enough. Right, questions. You have the opportunity to ask questions of the best panel you're going to see at this entire meeting. And if you fail to ask questions, then I'm going to talk about cricket. Gentleman at the back. We did really well in the one-day international.
Hello, this is Serkan from Medianova. I started and sold 2 companies before, so I'm kind of a serial entrepreneur, started in the US. My question to VCs here, when I see some valuations for Turkish companies, I realize that they kind of discount the value. They say, okay, this is what the ratios of a US business, this is what the ratios of European business, and they apply the same ratio to Turkish model, and they discount by risk factors and rediscount, and they come up with a number. My question is, Turkey's government's figures, economic figures, are now one of the best around the world. And the Turkey getting huge growth, and the companies are growing really well. I'm thinking like shouldn't be the reverse, there should be premium for investing in Turkey.
Who's going to pick that up?
I think there is. I think it's over. I think.
Quickly.
I think.
Good question.
Our experience is that, first of all, we don't discount because of Turkey. Secondly, I think there is a risk right now of the Turkish companies being overvalued, not because of Turkey, but because of the market. There is hype in Silicon Valley on social networking at the moment, and that hype is spreading across to all over the world. So I think one should be very, very careful. I think a lot of companies, not just Turkey but everywhere, are overvalued actually. But evaluation is not the first conversation. The valuation is the last conversation. It's when you actually sit together as partners between the entrepreneur and the investor, and you work out what the plan is, what the reality is, who wants to make what. Then naturally, the valuation should fall out of that conversation. If it doesn't, there's something wrong. It means the two parties are not aligned, and there should not be a conversation.
Yes, Serkan, I would suggest to you and to everybody in the room not to focus on the valuation. Focus on the partnership. Am I the right guy to work with you during the next several years? Will I bring value to you or not? If yes, the answer is yes. If the chemistry is there, we'll agree on the valuation. It shouldn't be a big issue. But if not, then there's nothing to talk about. Don't focus on the valuation. Focus on the chemistry. Focus on the potential value added by the VC.
Excellent. Gentleman over there.
Thank you. Abdul Michael Jabber, Minabs. I'm quite excited, actually. I've been in this business of startups quite recently, and I can tell you what's happening in Amman, Cairo, Beirut, Gaza, which I hope you will visit in your next round of European cities, Ben. Tel Aviv and Gaza, they are next to each other, but you'll be surprised to see the amount of entrepreneurs in these cities. One point that was mentioned, which is quite really serious, this random angel investors. In Amman, we have monthly pitching of startups. We don't have 35 every month, like 10, 12 companies. And per company, you will get about 4 or 5 angel investors. Usually you put a basket, and each one puts a card in a basket. And this young entrepreneur, at the end of the day, will end up with 4 or 5 rich businessmen negotiating with him or with her. This is a serious problem. It was mentioned, and I think now it's really making us a little bit scared in Jordan, because the valuation is going up and up and up. And since it was mentioned by the audience as a problem, there was no discussion how can it be solved, because I'm sure it will happen in Turkey, it will happen in every city that becomes a hub for startups. So what can be done? I don't want to use the word regulate, but at least to avoid this kind of fever of angel investors and all of this money being wasted and destroying the potential for VC funds at a later stage. Thank you.
Who wants to pick that up? Ali.
I think the biggest destroyer of VC funds and the biggest destroyer of the space in Turkey is the government at this point, with the grants that they give. I don't know if, I'm sure some of you know it, but they give out grants every year to hundreds of entrepreneurs without asking really what they do with that money, how they will perform with that money, without anyone being responsible, anyone tracing even where that money went. I think that's the biggest destroyer of the wealth in Turkey. And that's actually one of our biggest competitors right now, is the government, just handing out money to people with a business plan.
This is, you're talking about 100,000?
Yes.
I think it's a great idea. I disagree. I think if you can get 100,000 just to start up your business, to get out of bed in the morning, fantastic. And then you'll use that to come and see the VCs.
Once you see, I mean, I think I met quite a few companies in Turkey, but once you see a company in its 6th round of investment with the 6th business plan with my money, right, with my tax dollars or Turkish lira, right, then you start getting frustrated. I know that I can handle that money better than that government guy sitting in Ankara. But I think
no, sorry. I really believe at this stage where this is a new business in Turkey, every encouragement, it's like supermodels. You've got to pay them to get out of bed.
You're all supermodels.
So everybody has to have encouragement to get out and try their new ideas. And if it's a waste of money, I'm sure that 90% of it will be wasted. But so what? It means that people have got out, tried, failed. They got the flavor, they got the taste.
You're right, but I don't think Turkey has the luxury anymore to fail with the minimum amount of money we have in this market. I'm all for all of you going and getting that money. You're stupid if you don't get that money, by the way.
There you go.
You should go and get that money, and it means a lot to me if you already received that money, by the way, because it shows me you can fill out a form and go ask money that's for free. You should go get it, right? But from my perspective, I wish that money was spent a little more wisely. At least some portion of that money was given to institutional investors, VCs, or to fund of funds or whatever, so we can actually do something.
Absolutely. I think really, talking seriously and referring to the question, the real problem is that there is not enough smart early stage VC money in Turkey. And that's not just Turkey, it's the same in Europe, it's the same in parts of the US, etc., etc. And that is the real big problem. And the real problem is because of the reasons I've given you before. This is a very dangerous and not a popular asset class. So I think while we're talking about the government, I think the role of the government, they should be very aggressive, and they should set up, if there's anyone from the government, please take note, they should set up a fund of funds where they put significant amounts into local VC funds, smart VC funds. So for example, I'll give you a very concrete example. Ireland, a very small country, they wanted to encourage VC activity with smart money. They wrote big checks, 30 million, 50 million euros, to encourage certain funds to come into Ireland. That was a very positive and brave and bold move. Turkey should do exactly the same. They should be, basically putting up checks of 20, 30 million euros to basically cornerstone existing and new VC funds to come and operate. And that in itself will help work with the angels to make it a more realistic business.
Can we have a mic, guy down here with a question? Can we have a mic down the front? This chap here? Yeah. 2 mics.
Hi, I want to actually challenge all the investors in the current investing process. The current model is you find the entrepreneur, you find the idea with the entrepreneur, and then you invest the money and you try to flip that and turn it into some value. There is actually a new trend going on with the Somewhere Brothers and the Rocket Internet people, where you actually bring in the entrepreneur first with entrepreneurs in residence, throw them a playbook. Here's the idea. You do this really fast, and then we flip that around in 48 countries all at the same time. So is what do we need to evolve as investors, where we follow the traditional model of the entrepreneur, the idea, the first round funding, second round funding, and wasting all this time when the process is actually has actually evolved.
Well,
I'm saying this as a former Rocket employee, and I've seen this executed in various ways, and it seems to be a working model.
I've seen this in Russia as well, yeah.
Let me ask you a question, since you've been a Rocket guy. I mean, are you an entrepreneur or are you an employee? Or what do you want to be? The model works, seemingly. It's unique, great for the Zambers. They've invented something new. But I would ask myself as an entrepreneur, if I have a vision, if I have a dream, if I have an ambition, and I think I can build something big, does that reconcile well with that model? And if it doesn't, well then for the entrepreneur, this is a decision he has to make. Say, do I put myself under the control of someone else who has undoubtedly been successful, or do I look out for my own fate and go the harder way maybe initially to find funding with angels, with VCs, but be independent, because it's.
My question is not from the entrepreneur's perspective.
Yeah.
From the investor's perspective.
Well, I guess the ensuing.
Do we need to find entrepreneurs?
Do we want to do copycats, for which this model works fantastic, or do we want to really work with original ideas with really independent entrepreneurs? That's the question. If I want to do copycats, that's the best model.
It's a different business plan, right? So, like he said, they are mainly, investing in copycats. They are doing a terrific job destroying people and employing them and firing them a couple of months later. I met many people who luckily went through the process of the rocket in Turkey, and now they are finally starting their own companies after they saw the other side of the game. It's a different business model. And again, I'm sure they are fantastically successful. They are entrepreneurs, actually, when you think about it. That's their business plan. It is a challenge for us. The biggest challenge for us is they're inflating the salaries in Turkey in a crazy way. And I think they're hurting Turkey because
they do this everywhere, right?
So that they inflate the salaries. They spoil people. They create a pseudo market that doesn't really exist. And what you are doing is you're just stealing 6 months of people's time. And
okay, I'm going to.
Sorry. No. I think it's a very good question. But actually, the answer is, for me, very simple. It goes back to backing great people, exceptional people. So we do a combination. We'll, kiss lots of frogs and hope a prince or princess arrives by listening to pitches. We'll also study themes where we believe there's an investment opportunity. And we have a network of people that we really like and back, and then we'll bring them in to create companies to do that. So I think it's a combination. You have to do both in today's market, in today's world, but fundamentally it comes down to the same thing, really knowing great people to back.
I think the rocket topic is a great topic, and I'm personally, look, I've never worked with rockets. I only have anecdotal knowledge. I've only met those guys once, the founders. But I'm personally in awe of what they've achieved. I think it's phenomenal. I mean, when I look at what they're doing, they take an e-commerce concept, boom, they launch it in 20 countries. I don't think it's 48 countries. I actually think it's 20. But I actually went through the list. I was really interested in looking how they were doing it. And I think it's phenomenal. I think it's great, really. I mean, they're doing something that no one else until now was doing. Everyone was very cautious about how to scale e-commerce across borders and so on. And these guys are just doing it. And I think it's great. I mean, I think they attract a certain type of quote-unquote entrepreneur. I mean, typically post-MBA folks who, are excited about doing these things, launching new companies. So it's a kind of a hybrid form of entrepreneurship. It's true that I guess the typical VC fund will really look for very strong, kind of independently minded entrepreneurs who typically will gravitate away from the rocketish type of things, because they're usually the strongest entrepreneurs. They really want to be masters of their own destiny, and and the really strong ones, typically they have this kind of way of sometimes even they'll have a lot of self-belief, let's just put it this way, and they won't need other people to kind of inject the self-belief in them or to give them the recipe or whatever. And typically the best entrepreneurs we back are such people. But I think there is room for both. I think the rocket model is phenomenal. It works right now because e-commerce is booming, and there's a need to replicate these models really, really quickly. In a way, it's also a product of its time. I think it's a matter of timing. So yeah, look, I know there's a lot of also negative feeling about what what they're doing. I'm personally a big fan. I think it's amazing, but I think there's room for both.
And in case there are any lawyers in the room, when we said that the Sandwell brothers were destroying people's lives, that was allegedly destroying their lives. I'm sure they have very, very, very good lawyers. Any other questions? Yes, gentleman at the front, and then gentleman at the back.
Okay. I have a question, but before I would like to comment on the government funding part that Ali was mentioning. Actually, I've set up as two founders, we have set up a company. We were also at home company 3 years ago. We got funding from all the places that we could get, from all the government funding, from COSGAP and from universities as well. But actually, it is free money, but it's not all the money units, and also they give some percentage of the money, 50%, 60%. So still you need to have some own money. So I don't agree with the comment that it gives you all the free money because at the end we still got stuck and we couldn't move to the next level. So still you need some VC.
Excellent.
And my question is to Charles and Pamir. Charles was mentioning about in London, actually when London is compared to Turkey, Turkey is more energetic and it's more encouraging for investors to come to Turkey. I would like to ask, what are the things that work well in London and doesn't work well in Turkey? How do you compare the two markets? How do you see it both in terms of the companies and in terms of the entrepreneur profiles?
Good question.
I think probably in Turkey, I would not invest in Turkey without working alongside Turkish partners. So we have a network of very trusted people. So that's a barrier, which is we found a way to overcome that. I think in London, you probably have a better chance of finding a company which has got, let's say, let's talk about software, a software platform which can be globally used. And as we mentioned, in Turkey, one would hope to find that, but probably you'll be lucky to find that. So I think it's much more of a local play. You know, what I like about here, and I think we all kind of smell the coffee. There's this energy. You know, we operate in different parts of the world, and when we come here, people work hard. You know, we have our own experience through Mechanism. I mean, people are working, you know, very, very long hours to be successful. They're absolutely dedicated. And I think it's this energy, this entrepreneurial spirit, which can really make business. And it's you know, that's the most exciting thing about it.
And I'd like to echo what Charles is saying as well. I should caveat by saying I'm a little bit deconnected from the London scene right now over the last 2 years because I spent so much time in Turkey and the Middle East. We're not really actively investing in the UK at this point. So I don't even have time to go to networking events or whatnot in the UK, frankly, anymore. I live there, my family is there. But I'm spending really the bulk of my work time over here. What I really like over in Turkey, and by the way, this is the same with the people I work with in Jordan in particular. You know, you can send an email at 2 in the morning, you'll get a reply at 2:30 in the morning. Yeah, you call, the call gets picked up. You know, you don't have that thing called voicemail. That's, you know, in the UK, look, I just find that things go a lot slower. I think it's partly demographics. You know, Western Europe has this thing, you know, it's an older crowd, older country. People are more comfortable in their shoes. You know, GDP is higher, so probably people feel less compelled to work hard. And yeah, there's not that energy is missing. It's not there. And I would even, and probably I don't know much about the Berlin scene, but it feels like right now the center of gravity of the startup scene in Europe is shifting towards Berlin. You know, because you know it's probably a younger city. It's cheaper as well to just set up, do things there, and so on. So yeah, I guess we're like we feed on energy, really. We feed on people who are hungry, driven, fast, and that gets us excited. When things are a little bit slower, when things feel heavier, it just doesn't feel as great. And I feel that a little bit in the UK right now. Yeah.
Gentleman at the back.
Thank you. I just want to share the result of our investment story as an entrepreneur. Just want to advise some important points. We founded Mechanist as 2007, and we were university students at that years. And only we were our dreams and our passion. We have no money, and we have no experience on the investment business and tricks, etc. But our business need money to improve itself, and also we got 2 angel investment and gave a bit share to the angel investors. So the point is, my advice to the entrepreneurs is that please keep your breath as much as you can. Please. This is really important. And please prepare yourself for the long trip, long journey, because this is a really long journey. And go to the smart money at the right time. This is really important. Otherwise, you will be desperate at the table, and this is not a good point. I prefer to meet with Pond without my angel investors, really. Because really, Pond is the smart money, but as I said, before we got really more angel investments. So this is not a good point. It's just an advice for entrepreneurs.
Excellent, thank you. That's a good story. Gentleman over there. I keep saying gentlemen. Are there some women who are going to ask some questions? Would be nice. Anyway, the gentleman over there.
Hello, I'm Turkar from Udo Games. I want to ask a question about we are a new startup and we don't have any experience in both markets and both in business world. What should encourage us to feel that we could be successful in global? Maybe a sentence that we could repeat every day to feel lucky, powerful.
What was the? I'm sorry, I missed the question.
I did too.
What should encourage us to feel lucky that we could be successful in global?
Okay. How to be global? That's a question for Joseph. How to be global?
Yeah. So you know, if you need encouragement, that's good. You are probably on the right path. But maybe you are not yet ready to really be global. So what you have to be prepared mentally to accept that I am, you know, I have the whole world open for me. I want to do something great for consumers, customers all over the world, and I need help from people who can get me there. So you shouldn't get encouragement. You shouldn't look for encouragement to think global. You should have that thinking already. If that's there, that's when people like us and many others can really help you get you in contact with the right people, the right experts, open the right doors, and so on.
I mean, I would just answer that very briefly. I mean, I've traveled a lot and talked to a lot of entrepreneurs in a lot of countries. And the advice I would give you is to just look at what other people are doing. Now, that makes it sound like you're coming up with a clone. I don't mean clone their model, but look at what are the characteristics of global, of companies that have a global outlook. I'll give you a great example. There's a fantastic company called SoundCloud, based in Berlin. Started as a tiny company, 5 people, and they've attracted a huge amount of excitement because they're doing something that's completely different. And that's the hard part. But that's what entrepreneurs, in my experience, that's what entrepreneurs are incredibly good at, which is coming up with ideas that are completely different to anybody else's ideas. So it's a difficult answer because it says go away and think about things that are, don't look at other people's, look at the successful global platforms, and they are all platforms. I think that's a key point. Look at those and think, how can I make a platform that other people can use?
And I don't think the word global was in that initial thought. That's my only thing. I think they just wanted to create something, right? They had this great idea, they had the passion, and they started running. And it was so great, it became global.
That's a good point.
But there's another point here to this, which is from a VC's perspective. Never think you can change a person and his or her character. You can change the business, you can tweak it, but you can ultimately not change the person. So you, as a VC, this is all about finding the great entrepreneurs. You have to be convinced that this person has the ambition and the energy and the breadth to do it. If not, just don't invest because you will be there's a higher chance of being disappointed.
Okay.
I think sometimes in technology, also in some of the internet businesses, people forget something. They get so carried away with the technology and the social networking and this, that, and the other. come on guys, we're here to run a business. So I think sometimes you need to step back, and before you think about being global, you should step back and say, how are we actually going to make money here? Because if you don't make money, it's not going to go global. It's not going to go out of Antalya. So I think, you know, we see so often, and we've invested and we've failed because people have got so carried away with the technology and not with who's going to buy it and how much for and when do we get into revenue, when do we get into profit, et cetera, et cetera. But believe me, it goes back to the exits again, when companies get into revenue, and particularly when you get into profit, you can exit companies, and there's ways of evaluating those companies, you know, day in and day out. So I think, you know, that priority of thinking about business, and you guys are good at it. You know, I've been to the bazaar lots of times and got screwed. So you know, think about the business and how to make business.
Let me come back on that one, and then I'll come to the gentleman over there. Would you have invested in Twitter and Pinterest, neither of which have a business plan?
Depends on the people. Depends on how it went with those people.
You'd invest in Jack Dorsey. Everyone would. Gentleman over there.
Thank you. Hi, Ben. It's Burak from ale.com. Just 4 letters as you like it. My question is to the panelists.
Well done.
My question to the panelists. Okay, we have a clear idea about what are the things you are looking for before you invest to entrepreneurs. But what about us? What are the things we should look from to investors? I mean, how do we choose you? Let's say all 5 of you came to me and want to invest in my company almost with the same money, same shares. Which one do I need to choose?
Great question.
Right. So the very quick answer is, I'm gonna. If we looked at you, we'd be a pain in the head doing due diligence, finding what your grandmother does, who the name of your dog is, etc., etc., etc., etc. You should do exactly the same with us, and we should give you a list of all the founders, all the CEOs that we've invested in over 14 years, and you should call them and find out how we, and not only as we as a company, as a fund, but how we and how individual partners in the fund behaved after they put money in. And then you decide.
Yeah, great question.
Very simple.
Anyone else got anything to add on that? I think that's yeah.
I mean, I got the same question last night from someone else, and I think when the things are going great, it's everyone is happy, you know, everything goes well. I think you should always ask yourself, you know, along with what Charles said, do I want this guy next to me working with me when everything is, you know, we are going through some rough times. And I think that's why you should ask the portfolio companies, how did they react when things went bad? How did they react when, you know, we had to pivot, or we needed more money, or the business plan didn't pan out? And that's how you should decide on who you want to go with, because it's, you know, it's a long journey, and you want a partner who will push you and help you or lift you when needed.
Yeah. One analogy is it's like a marriage.
You know, before you get married.
I mean, before you get married, I'm sure you would, you know, think a little bit about it, you know.
Are you really?
So it's the same thing here, you know. And at the time when the company is getting the investment is usually a time when things look pretty bright and good. But you also have to think about how the relationship will be when things are pretty bad. Not about the relationship, but about the company, you know, when things are difficult. And you want to make sure that you have not just fair weather partners, but rough weather partners as well, you know, who can help you with the ups and downs. I think you know, that the good thing now is, again, the microphone is disappearing, but the good thing now is that I think it's really easy to get a view on, I think, you know, with the internet, with the networks, with LinkedIn, with everything, with, you know, it's really easy to find out who you're comfortable working with and who you're not comfortable working with. And actually, from my perspective, if an entrepreneur doesn't do too much due diligence, that's also a red flag. No, for me, it sounds like they're not doing their homework.
Excellent. Yes. Can we have a microphone? I think they want it for the. Hang on, we just get a mic. It's for the broadcast.
We were also listening to Sina Afra 2 nights ago, and he was mentioning that in order to find the best investors, venture capitalists, or you should give them a call at 3 a.m. And if they pick up the phone, then it means that they are also believing in your beliefs, I think. And I think he started an initiative today at Twitter. Let's call your investors 3 a.m. On the 1st of March, and then share your experiences.
Don't do that.
Stupid.
If you call me 3 in the morning, I won't pick up. I will block you. I will
so the entrepreneurs here realizes how important for you.
Well, we should meet first, right? If I know you, if I see your number, if I see who it is, I will pick it up.
Okay.
But if it's a person that I never met before and starts calling me 3 in the morning,
of course, it's not the same. So he was saying that the investors you are in touch with,
of course, yes.
that the people you don't know.
Of course.
So
Okay, I was thinking that.
Maybe you misunderstood.
3 a.m. works perfectly for us in Silicon Valley. Just we're working hard.
Okay. Excellent. I'm very conscious. Oh,
well,
there's a gentleman over there.
Okay, we have one more question, and then I think that will be. Then I'm conscious that we're running out of time, and Adam's going to kill me. So I think this had to be the last question.
Yeah,
I'm sorry.
I want to change this subject a little bit. I want to ask the question about the topic to invest. How do you see the B2B marketplace to invest to the smart money people?
Okay, B2B. Yeah. Who's going to pick that up?
Gosh, that's a very broad question.
I think it was a big hype. Did it come?
In Turkey, it hasn't happened yet. I think in the B2B space and technology, we are seeing more and more solution providers in the B2B space. I think they are very exciting. I'm assuming you're talking in Turkey and B2B technology investing in Turkey.
Technology or e-commerce.
So is that what you have in mind? B2B technology companies providing solution in the B2B space. So if that's the question, we do see more and more of them. So far, we have focused on e-commerce, internet services, and gaming. I'm thinking towards the end of this year, we will mainly start focusing on B2B ERP type of solutions, software as a service, more disruptive models, more risky models that will hopefully have a better chance to go global as well. These companies are harder to get. We don't have as many of them, but I think we have some very interesting companies coming up in Turkey in the B2B space. Yes.
It's a slog. B2B will be a slog. That's my experience.
It's a slog.
It's a hard market to get to sizable companies. The question is, what do you consider sizable? If you say yourself, well, a 10 million revenue company with a decent bottom line is a sizable company for you, that's great, and all the merits to you. But it's not something a VC would ever be able to fund, because you don't get the valuations for that at the exit. You'll ask me to pay a valuation, I make an example of 5 million at the entrance as a seed, and the potential of it to be sold is 20, well, that doesn't work from the outset. In software, this is our experience, building software companies out of Europe at least, by and large, didn't yield many big successes. There were some exceptions in the UK, there were some exceptions in Scandinavia, there were some exceptions in, what do you mean, SAP?
SAP.
No, sorry, those are the two of a country that is the biggest in Europe. I mean, well, what kind of a testimony is this? It's a disaster. There were more successful companies coming out of the UK, certainly in software terms, and even out of Russia. I mean, if you look at SW Soft and those guys. So the question is then, how do you define B2B? Is it software to large companies? Is it software to mid-sized enterprises? I don't know what the ecosystem is like in Turkey about in the business arena. Or are we talking about really small family companies? We tend to we've butted our heads in enterprise software. Didn't lose a lot of money, but certainly didn't make a lot of money. I'm be very open about this. The most successful software company we've had has been sold after 10 years. So also there's a long story to this. What I think is a potential in the future is you have the cloud and you have small office, home office, very small enterprises that are looking for and needing productivity tools. And this is a way to re-engineer or to engineer, to create new types of software solutions, which are tiny solutions, but you build on a platform that is a self-service platform for small enterprises. That's where we see a potential, and I guess that there's no reason why in Turkey that shouldn't be the same potential.
We spoke privately about Kupi VIP. I don't know if anyone's familiar with the Russian flash sales company, but I mean, correct me on the timing of how quickly he executed. It was April. It was in April when he started getting funding, and he shipped his first product, I think, in September. I mean, it was a phenomenally fast.
Well, this would be slow by the rocket standards, I guess.
Yeah, that's true. Yeah.
Well, actually, in Jordan, in Market VIP did it in 2 months.
Yeah.
Right,
Incorporation to first product shipped.
So there you go, 2 months. That, I mean,
but these are the exceptions. In the real world, you're actually grinding away, building for 3-5 years to make valuable companies. That's the harsh reality of the real world. And everyone should be, investors and entrepreneurs should be prepared for
aware
that.
of this.
And that's where the make or break is on most companies.
Well, I think it's been a fantastic panel. I think it's been absolutely outstanding. I think that the lessons to take away from this were very much about living the dream. It is about that. It sounds like a terrible, live the dream, very Californian. But no, and let's not be too European about this. And I spent a lot of time traveling in Europe, and I would say that if Europe has a problem, it is we are incredibly bad at both success and failure. Actually, I see it less here in Turkey, both of those things, but I still see it. And I'll give you a great name drop example. Bono, so let's just let that go out there for a little bit longer. When I was talking to Bono, and he has this great story about success. And he says, in America, if you are successful, you have the house on the hill, and the car, and the swimming pool, and the fast life. And everyone in America looks up and says, I want to be that person. And he says, in Ireland, and for Ireland, read the whole of Europe, in Ireland, everyone looks up and says, I'm going to get that person. So don't be European.
And in Denmark, if there's a successful CEO, in London, he'll probably buy a Ferrari. In Denmark, he downgrades his car so no one notices.
Yeah. So that's my one piece of advice is don't be European. It's a fantastic panel. Thank you very much indeed.